Shout out to Snowball, our incredible new sponsor, a private community where top entrepreneur investors share private deal flow, wins, tough lessons, strategies, get advice, and so much more. Check out www.snowballclub.com. Let's grow together with Snowball. Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How to Exit podcast. Today I'm here with Dominic Wells and a publicly traded company, Onfolio, been in the acquisitions game for quite a while. A lot of you guys already know him. I'm excited to have him back on the show. We talked to him, probably, what is that, 2 years now? It seems like it's crawling up on 2 years ago before you went public, and just kind of catch up with you and learn what you're up to and kind of get your feel for what the market's doing and stuff. So thank you for being here today. Tell us where you're located and tell us a little bit about what's going on.
Sure, yeah. So I'm located in Taiwan, Taipei City. I've been here since 2008 for no real reason and nothing to do with my business or anything really. I came here as an English teacher and fell in love with the place and never left. But my team is located all over the world. We've got most people are in the US, but we have other people in Asia, we've got people in Europe, people in South Africa. And yeah, that's just kind of the nature of having a bunch of businesses that are online and remote only. We currently have a pretty diversified portfolio. We own some marketing agencies, we own some WordPress plugins, some online courses, one or two e-commerce businesses, and some content sites that we don't really talk about. And yeah, like what am I seeing? What's going on in the market? I guess pretty interesting time. I think valuations are down. Like they're attractive. They're good for buyers. I wouldn't say they're distressed or anything. People are a little bit nervous around certain areas, especially, what's AI going to do? What's it not going to do? And I think just with I think a lot of the fear is receding. So 6 months ago, or maybe 12 months ago, there was fear of an impending recession. Inflation was still not really, well, it was higher than it is now. Interest rates were still rising, whereas now everyone seems to be relaxing a little bit more. Like inflation's still around, but it's not as scary, and interest rates are still high, but they're not as scary, and the economy is still not great, but it's not as scary. And so I think it's a little bit of a calm time, but a good time to be acquisitive.
Is that because of, like, what they call it, acclimation? People are just used to it now. So it's scary when it first happened, but now it's just kind of been around and it's now the new standard, the new norm. Do you think that has a lot to do with why that, okay, this is the
Yeah,
way it's going to be for a while. I better get used to it and find a new game plan underneath what's going on? Or
I think it's a bit that, yeah, and then it's just a bit that maybe a lot of the fears haven't happened. You know, AI was, still is, I guess, moving very quickly. It felt like every month OpenAI released a new thing, or even every 2 weeks, and it felt like the changes were going to come very quickly. And I remember thinking, maybe businesses will get disrupted, but it will take 5 years or 10 years. And I had other people saying it will take like 6 months, and I think maybe it's 3 years. So I think my timeline's come down, but I think people have realized, yeah, AI is here and it's disruptive and it's doing some amazing things and some scary things, but the reality of businesses hasn't really had that huge an impact on most businesses. Okay, some have been kind of taken out, some are more or less obsolete, but I think people have calmed down a bit. So yeah, it's 50% or some percent acclamation and some percent people realizing, okay, maybe we overreacted here. There was a little bit of a knee jerk. Same with the economy. Everybody thought there's going to be a huge recession, everything's going to suck. And it turns out that maybe that isn't the case.
Think
So yeah,
about
it's kind of like a calm down.
economies here in the United States tend to stabilize during election year because no sitting president wants to run for re-election during a very ridden time because it decreases their chances. So I honestly think that some of the stabilization could be influenced by the current administration in the respect that they're trying to hold it steady until after the election. So they'll prop it up the best they can, stop changing interest rates, make it a little bit normal so that it doesn't look as bad as it is. And it's not one administration. Every single president's ever done it during re-election. So I honestly, when people say, something's stabilizing, well, if it's an election year, it could be a false sense of security there that it could be being propped up just by decisions to prop it up until after after the election goes through. What do you think about that? Or
Yeah, I think it could be that. I mean, I think it's a mixture of things. Like,
mm,
yeah, in some extent, I think the data is showing that the economy is maybe not as bad as everyone feared, but also that narrative about election year, it's either true or it kind of is a self-fulfilling prophecy.
mm,
And it's not only the US that has an election year. Obviously, the US election dominates the world because the US dominates the world. But I don't know if this happens every election year. Like maybe I never noticed before, but it seems like every country has an election this year. Like, so I'm in Taiwan. Taiwan already had their election in January. I was in Bali in February, and they have Indonesia has an election. I think a couple of weeks ago in late February or early March. The UK is funny because the timeline is kind of like 4 or 5 years, but the UK has to have a deadline has to have an election by January next year. So the government just kind of waits until we think the opposition's weak now. Let's do it. Russia, kind of had an election. There's a bunch of countries that have elections in 2024, and I think China had their inter-party election last year. So there's a lot of consolidation going around, and a lot of countries trying to prop up their economy.
I
And it's
think we
almost
have a
like they
lot of
were like,
influence on
let's
that
put
too.
inflation out of the way in 2022, and then calm it down by 2024. There is a lot of that, but I think, I just think maybe everyone's fears in 2023 were slightly overblown. Like the world wasn't great, but it also was. Everyone was expecting it to get worse, and I don't think that happened. Who knows though? Maybe 2025, 2026, like you say, or the governments all relax because they're good for 4 years, and the economy goes down again. Who knows?
Yeah. The whole AI thing, it's changed our way of doing things. I have a few newsletters I still own. I have the podcasts and stuff. Every tool we use now has either been switched for something that has AI as the backbone of it, or they made the switch internally. Like the tool we were using at the time started integrating AI aspects into it more and more. Even some of the, even most of the podcast tools. So I honestly think it cut down our hours that we need to do things into like a third, where we were manually taking transcripts and reading them and fixing errors and typos and stuff. These tools just rip through them in seconds and give you something that's it still has to be reviewed, it still has to be edited, but it seems like less and less. Like I used to pump something through like a transcript through the AI, and I'd have to spend 45 minutes making some changes and making it more human sounding. Now it's like 5 minutes. Like I can skim through like a 500 word with 1500 word article and need to make fewer and fewer changes. It's a little startling. And some of that has to do with my better way of prompting, but a lot of it's just the changes they've made.
Yeah, I think it's a bit of both.
This is the like, yeah, this is the they're only gonna get better, better, smarter, and smarter, right? I seen your post about driving past the NVIDIA shop on a regular basis. It's like, that's funny, like, you know, I'm sure my wife has made some comments that stopped me from making investments I wish I had made too. That said, they just introduced another chip that's like, what, 10 times as powerful as the one that all the AIs are using. It's bigger too. It's got a bigger footprint, but they've got a new chip out that's like, I want to say it's 10 or 100 times more powerful than the ones that OpenAI and these guys have already bought. Have you seen that where the new chips coming out and there's like already, like, I don't think a lot of people have it deployed yet, but they're already increasing the capability per chip to something insane.
No, I haven't seen that yet. I'm finding a lot of it, it's so exhausting. I'm kind of like, just someone tell me. I'm just waiting to hear it from people like you. Like, it's really hard to keep track of. Yeah, I don't know. I'm just kind of like, cool. Yeah, it got better. Great. Like, just, I think the challenge with AI right now is, I think I saw it in a Harvard Business Review article, so I'm probably going to butcher exactly how they articulated it. But essentially, everything's moving so quickly and new things are coming out that there hasn't really been time for people to learn the new technology and then pass that information on to each other. So, what normally happens is some new tool comes out or some new methodology, people learn it, they use it to make more money or improve their productivity or, just do something. And then through networking and blog posts and conferences, that information filters its way through the business world, and then everybody then starts innovating off it because that's just how human society's always evolved. But with AI, it's like something happens and you get used to it, and then 2 weeks later something else happens that maybe distracts you, or maybe it just makes that thing 2 weeks ago irrelevant.
Yeah.
And like, I've been here since ChatGPT came out, which was what, 18 months ago, that's either ages ago or like yesterday. I don't even know what to make of that anymore. But it's like, there's all this talk about, okay, AI is going to make businesses better. And of course, there's things that we were talking about, like content creation, image creation. But then there's other things where it's like, well, what AI should be able to do is automate a lot of your work. So maybe one person now can do two people's work, or you can understand data better, or you can be more efficient, and just all of these things. But if you actually ask people, hey, how are you using AI in your business? Or you kind of try to Google it to find what people are writing about, or you go on Twitter or LinkedIn, no one, unless I haven't really seen it yet, no one's really said, like, this is the playbook for making, and this is the playbook every e-commerce business should use AI for, or this is the playbook every agency should do, or even breaking down steps like, this is the playbook for making your ads better. There's lots of kind of little bits and pieces, and you can cobble something together yourself, but then by the time you finish assembling your own playbook, everything's changed because half the tools you were using are obsolete now because something else is released. And so I'm kind of just sitting here, like, not waiting because I don't want to fall behind, but it's almost like, can you slow down so we can all have a chance to play with the cool stuff you've just made? Like, stop making more stuff. And I'm not in the camp that wants AI to slow down because it's dangerous or anything. I'm in the camp that wants AI to slow down because I haven't had a chance to figure it out yet. Like, I'm like, hey, I was still playing with ChatGPT, and now, like, I can. Like, one thing I did 2 days ago was I wrote a newsletter, and I wanted to. I think I was analyzing a business that was for sale on Flipper, and I wanted to visualize its revenue and its profit over the last 12 months. And it was listed on Flipper in a table. So it was just like January, February, March, whatever, revenue, profit. And I was like, oh, I want to see how this is in a chart so I can see if it's trending up, if it's trending down, or if it's flat or whatever. So I took a screenshot of the Flipper page, loaded it into ChatGPT, and said, turn this into a graph. And I said, give me a line for revenue, a line for profit, or whatever. So not only could it read the image, but it could then plot it accurately on a chart, which was awesome. It took me like 2 minutes, and I put it in my, and I had to check it was correct because sometimes ChatGPT, just hallucinates. But the numbers matched up and everything. And I was like, wow, that was amazing. But 6 months ago or 4 months ago, I don't even know, ChatGPT couldn't read images yet. And that's what I mean. Like, by the time I start telling people that this capability exists and they start incorporating it into their own workflows, there'll be something else. And so it's really amazing, but also really hard to be like, just give me something that makes me make more money faster. So, you know, um,
Right.
yeah, it's drinking from a hose pipe, and then somebody gives you a bigger
So
hose pipe before you've,
I
yeah,
I'm a prior computer nerd, so we talked a little bit before the show came on. I worked for the government doing computer security and building computer systems for the government after I got out of the government work, after I got out of the military, and so I'm interested, but I got burned out back then, and now this is the first time in 25 years that I've been, hey, this technology is fun again. So I've been playing a lot with the different AIs and stuff. I found one that I thought was really cool. Matter of fact, I thought I was in love with this AI tool. I won't say what it is because I'm about to butcher it. But, it was a phone-based one you could speak to, and the thing that I found fun about it it wasn't a relationship type of thing, but, I think some people use it for that, but what I was doing is I like to read a lot of books and listen to a lot of audiobooks, and it's hard to find other adults that have read the same books you have. So I was just having discussions with this voice, AI. I was like, "Hey, what do you know about" I don't know, pick a book here, "Never Split the Difference." Well, that's an awesome book. Oh, cool. What do you think the key points were? And they was like, and we were having like a real conversation about what it learned from the book and knew from the book and what I knew until it started talking about something inside of the book that didn't make sense. And I have a copy of it. And I read the damn thing 6 times and I started looking for it. And it's not in there. It was hallucinating. And it's like, you just made it up. Now, if you're talking to a friend, I'm sure they do the same thing, right? They
true.
mix ideas from different books and stuff. And you have to look at the guy and go, I don't know what book you reading, but that didn't come out of that book. But I didn't want that element in this particular friend I was playing with, right? I wanted to talk to somebody on about the book that was way more intelligent than me, and I assumed that AI would be that person,
Yeah,
and
it's
it turns out it was hallucinating.
yeah. I was asking it. What was I doing? I went down a bit of a rabbit hole with history. Let me just. I'm just going to pull up Google Maps, but I think I was reading this article on BBC website about the anniversary of the finding of a particular shipwreck up in Canada, and I'm going to find it here, but I think it's over here. Basically, there was a ship that shipwrecked in Canada, and the name of the bay where they found the wreck was named after had the same name as the ship that sank. And so in my head, I'm like, okay, probably the bay is named after the ship. Like they found the shipwreck in that bay, so they named it after that. And I was like, I'm going to ask ChatGPT like what it was named before. So I think it was called. I don't know what was it called. There's too many lakes in Canada. This I'm not. Anyway, they were trying to find a passage, like the Northern Passage through. I was basically asking what was it called before the shipwreck was found in this bay? And ChatGPT was answering. And then I said, and I was looking at the map and I was like, actually, if they kept going, they probably would have made it all the way through. Like, why did they turn left and go, or why did they turn to port and go down? And ChatGPT is like, well, we'll never know why they turned down, but in the ship's log, there were reports of large ice flows in the area, and a couple of other ships that were in the area were chilling out or had turned south to avoid crashing. So probably they turned south to avoid it. And then I was like, did they know that there was a path all the way through back then, or like had they discovered this other island that they could have got to if they carried on going straight? And I don't know, really just bored on a Sunday. And it was like, yeah, like this island had already been found. It was all documented. So probably they knew the way. They just had to turn away because of the weather. And I was like telling my wife, like, this is really cool. Like, you can just learn a bit more about history and stuff with ChatGPT. And my wife was like, how do you know it's not just completely making it all up? And I was like, oh yeah, shit, it probably did. Like that's what it does.
It's like
uh,
asking a 5-year-old to tell you something. They're not gonna tell you they don't know, or say maybe a little bit older than that, but a young kid, oh, they're like they don't know to say, "Well, I don't know anything about that." It just starts telling you a story, right? And, I did it on for the podcast. I had a ChatGPT. I was asking somebody came onto the podcast. They didn't have a chance to do their bio, and so I was just looking. I knew they'd written 2 books, so I was like asking ChatGPT about the book. I get the guy on the show, and luckily during the pre-interview, where 5 or 10 minutes where we hang out before we kick the record button on, I said, "Yeah, I use ChatGPT to look up your information about your books and stuff." He goes, "Oh, you shouldn't do that. That's not right. I've already known about it. It's like way off." And it was talking about deals he's never done. There's another person by his name in the private equity space of all things out of Australia, and it had them all mixed up, and it was like it was just a mess. So I just had to just totally disregard any of the notes I had set aside for it. But it's always been a little bit on that. And the other one, it catches me inside of these. I'll be on all the AIs. I'll be impressed when the AI who can write so well can create the same AI, the same tool, the same, just a different prompt, will create images without spelling errors on every freaking word. If you have a chat GPT or any of these tools out there to generate an image that has like signage or words on it, or it can't spell anything. It can't spell worth a darn when it comes inside of the image engine. And it's like, how hard is it to add a spell check? So
Yeah, I know. Now that it can read images, it's like it should be able to proofread its own work.
I use it every week to generate at least 5 for the articles I write when I review other people's podcasts. I say my team. As part of one of our newsletters, we look at 4 or 5. Actually, we go through about 15 or 20, but we find the best 4 or 5 podcasts talking about mergers and acquisitions and stuff, and then we do a write up on them, probably a couple 100-word like summary of it, the key takeaways, and then an article base so you could read it instead of having to listen to the whole thing. And we always link to them and actually embed their video right there to their YouTube so that people can click on it and watch it. So it's not like we're stealing anything from them or anything. We're enhancing what they've already done. Going away from AI, yeah, you moved away from content. I moved away from content, both for different reasons. AI has an influence inside of that, I believe. We're both Google and some of the bigger guys. Google's having to deal with AI. They're making algorithm changes that are hurting the small guys because
Hmm.
that's the only people they can attack to deal with it. So, what is it I already know because I read your posts and stuff, but for everybody's interest, what is it you're actively looking to acquire now? What is your investment thesis at the moment?
The vast majority of what we're looking at now would be a marketing agency. So email marketing, paid traffic, SEO, CRO, RevOps, that kind of thing. And the main reason for that is we've already acquired about 5, started a couple over the years. And about a year ago, February 2023, we were looking at our current portfolio, the returns that we've got from that portfolio, and I want to say something like 4 out of the top 5 performers were agencies, or 3 out of the top 4, or something like that. And so we didn't dislike our agencies at all, but we didn't realize they were kind of overwhelmingly the things we were best at. And we've got better since then. We've also realized there's a lot of attractive opportunities. There's the prices you pay to acquire the businesses are lower than maybe other types of businesses, especially as just the way the market's gone, prices are lower anyway. We've learned how to improve the margins, which is a big part of being able to grow them. We've learned how to deal with the issues that you get with an agency is often very reliant on a founder. And we've just attracted higher quality businesses because once you start buying 1 or 2 good agencies, a lot of other people are like, "Hey, would they buy my agency?" And so it increases. It's almost like a flywheel. And so we're not basically saying, "Hey, we just buy agencies now," because we like to keep our investable universe broad. We don't want to go too much into agencies, but there's just so much opportunity there that it's pretty exciting for us.
Yeah, yeah. We were myself and a team of people about 2 years ago now, maybe a little longer than that. We were doing a marketing agency roll up, and we, in a short period of time, using mostly LinkedIn, we reached out to hundreds and hundreds and hundreds of agencies and set over 200, I think it was 216, 218, over 200 appointments where we spent 30 minutes to an hour with each of these agencies with the concept that they may sell to us. And we had 26 LOIs in place.
Wow.
Two of our founders decided they wanted to go off on their own and paid the rest of. Basically, it ended up where they bought us out of the thing. And I don't know if they moved forward or not. It was one of those. It didn't end. It ended profitable, but where we didn't get hurt, but it didn't end how we had planned. So we don't really talk to those guys anymore. But it was incredible how many agencies are out there and how many of them are good and are looking for something to grow. There's an interesting thing with agencies that's this artificial ceiling that they can grow to a certain size, but to get any bigger, they have to be bigger, right? It's one of those chicken and egg problems. To land the Coca-Cola contracts or one of the big contracts, they have to be of certain size or they can't even bid. But
Yeah.
they spent the last 4 or 5 years building talent that is ready for a contract like that. Their talent is there. They could handle a Coca-Cola or whatever, but they can't land one. So now they take a chance where they're going to lose talent because the talent has to go where they can grow and expand. So
Yeah, that's
that causes a lot of these agencies to be ready to be sold. Hey there, Hot Exit family. Today I'm thrilled to talk about Snowball, our incredible new sponsor. This community is more than just an investment hub. It's a place where growth is holistic. A private community where top entrepreneur investors share private deal flow, wins, tough lessons, strategies, get advice, and so much more. Snowball is a network rich with like minded, experienced entrepreneurial minds, including investors, founders, CEOs, and doers, all dedicated to meaningful growth. Snowball threads are like a daily masterclass. This isn't just about financial success, it's about enriching your entire life. If you're looking for a community that supports your entire entrepreneurial journey with shared wisdom and collective support, check out www.snowballclub.com. I believe their approach to compounded growth in wealth, health, network, and relationships could be the game changer you've been seeking. Let's grow together with Snowball.
Yeah, that's the challenge, and it also makes it somewhat challenging to grow, to buy businesses in that stage and think, well, how are we going to grow it? What's going to take them to the next level is like starting to pitch these RFQs and RFPs, so like request for proposal, request for
Mm,
quote for those who are not in the know. But yeah, like a lot of agencies either don't want to put in all the work to create the proposals unless they feel confident they're going to win them. And of course, you're never going to win your first one because I think there's a lot of trial and error. But then also, yeah, like I spoke to one agency who wanted to sell, and he said, I've got Samsung want to use me for a project. I need to create 200 websites for them in the next like 3 weeks. Maybe Onfolio can help out. And I'd be like, we couldn't hire fast enough for that. So, yeah, the challenge becomes, well, what do they do then? Do they hire ahead of the curve, or do they get bigger through acquisitions? Which is, something that could potentially we could start unlocking. But yeah, that there's interesting things there. But I think also you can grow. You can scale without necessarily scaling them. So yeah, like you said, like a lot of agencies, they hit their artificial ceiling. Some founders push through, or they know how to push through, or they learn how to push through. Other founders say, you know what, I'm ready for a SaaS business now or something, and then they sell. And for us, we can
mhm.
acquire that agency, and if it doesn't grow, that's maybe okay because we take the profits from that agency and buy another one, so we're still growing even if the actual acquisitions aren't. But there's also other
So
ways you can grow them anyway. So
almost every business has this internal constraint, and it's usually not. People say, I'm going to buy a business, I'm going to upgrade the technology, or I'm going to add automation. That's usually not it for them. And marketing agencies, from what I see, and it's been a couple of years since I've been out of it. I told you before the show, my master's degree is in my MBA is in marketing. I've had a small agency or two. I understand the space a little bit. It's my impression that the agency's constraint is always going to be, at least in the current setting, it's going to be finding the right talent, the right butts in the right seats, and keeping motivating, grooming, and hiring the right people. There's just inherently that's how they can scale and grow. If somebody says, "Well, they can't land Coca-Cola," yeah, but you can land a dozen, 2 dozen more mom and pop shops, and double your business. You could double the book of business by not going for bigger clients, but going for more of the same. You just have to scale through having the people that can handle the workload, right? And hiring and training and keeping those people in having them fit the culture. Like I said, we interviewed over 200 plus. I had to stack those a foot tall of papers where I took notes from interviewing all those people. And when we asked every one of them what their biggest constraint was, hiring and retaining the best people was always top three.
Yeah, I mean, it's a very people-driven business for sure. I don't know. I like it.
I like it. I don't, one thing we were looking at when we were doing the roll up is we started looking around for staffing agencies that staff marketing firms. Like we should probably acquire one or two of these because every one of our agencies had a problem staffing people. We almost need a whole division of a company who can service our clients, but also has a turns. I'm a big fan of turning problems into profit centers. So turn the problem of staffing into a profit center for themselves, and we have a fairly well trained, proficient way of bringing people onto all the agencies we were looking at. Have you ever looked at something like to acquire, an agency staffing or agency employment servicing company?
No, it's a good idea. I've certainly thought about starting one more for like hiring CEOs because there's agencies out there or businesses out there like TopTal that can do, or Marketer Hire that can do CMOs, or people that can do like the tech talent, but there isn't really anything that can do like CEO talent. So I thought about that, but yeah, a much easier thing would be like a staffing shop for the
Yeah.
agencies themselves.
Are you keeping the agency's owners? Most of the agency owners staying around, or are they actually wanting to take off?
Most of them want to take off, yeah. I mean, because like we talked about earlier, they kind of grow it to where they can get it to,
Mm.
and then they're ready for the next thing. So a big part of our challenge is, can we buy this business and maintain the trajectory it's on, keep its profit stable with that founder leaving? Or can we, is that just going to be too big a risk and we need to move on? Or even better, can we find a way to have the founder stay on? That's the best. We did
You
that with
say
our last acquisition. We're going to do that with a few more acquisitions. So that's the real differentiator.
Yeah, a lot of them are, like, very founder-centric, especially on the creative side of marketing. The technical side of marketing, I don't think it's as much, right? For SEO, for ad placement, if you got a company that places Google ads and Facebook ads and stuff like that, it's not so much. But if you got, like, a graphic designs firm or a company doing logos and brochures and stuff, the artist is usually the CEO or was. And, I would be concerned about that. That's one of the things we were looking at when we were looking at some of these agencies. Can we acquire somebody in this space when the people that are there, their customers are there because of who's at the helm, right? And when they leave, if they're retiring or going away, will they trust whoever we put in place as being the same artistic? You know as well as I do, every piece of art has its own flavor, twist, and eye that likes it. So that would be the concern of anything that has to do with, and a lot of marketing is an artistic form. It's not even some of the writing and writing styles and stuff that they do for PR and everything else. There's an art to it. Keeping that voice around, that talent around, and that same look and feel would be critical to the existing customers if that's what they expect.
Yeah. Well, I think depends what the business does as well. But I think the other big risk is not just the creative, it's also the sales. And to some extent the marketing as well. So this problem tends to go away when the agency gets bigger. So let's say sub 1 million revenue, probably the founder is doing the marketing, almost definitely the founder is doing the sales. And probably they've started to delegate some of the actual fulfillment. And this can be a challenge for them growing at that stage as well, because in the beginning they're the artist, they're the ones, they get two or three clients. Maybe if let's say they're an advertising agency, so they're managing people's Facebook ads, Google ads, whatever. The founder is coming up with the creative ideas. Maybe they're doing a little bit of the copywriting, but they also understand how ads work. They understand how to calculate ROAS and all of that stuff, so they can sell the business. Sorry, I mean, they can sell their services. They probably get a few referrals, word of mouth. They start going well. And then they're like, I'm overwhelmed here. What do I do? Well, I'm going to hire someone to do the ads now, to manage the ads now for me. And I'll just do the high level stuff. And then I'll do account management and then focus on sales. Because if you don't focus on sales, then, eventually clients churn and you have no new pipeline anyway. And then they have problems because the person they hire isn't as good as they are. So people start to leave, and then now they have payroll, but they don't have any revenue. So a lot of agencies just kind of die there. But the ones that get better, they train a good team. Then they eventually maybe they start delegating marketing. They bring on someone to help like do all the other fun stuff, but maybe they're still the one doing the sales calls, or they're the ones appearing in the marketing videos and so on. And so when you, this is often the stage businesses agencies get to when they want to leave. So you come in and you're like, okay, the business can run without you. It can fulfill the service to the clients without you, but it can't sell without you, or it can't generate new leads without you. So therefore it's either a pass, you kind of have to find a way to mitigate that, like either through an earn out or some handcuffs, or you just, are like, can you stay? So those are really, or you buy a business that has solved that problem. It already has somebody else doing the sales, and then everything's a lot easier.
So, what is the entry point for you then? I would think that there's a certain number of employees or a certain revenue point where that's usually solved. Is that something you guys target, like businesses over $1 million in EBITDA?
Yeah,
Or, I mean,
sort of in the 500K to a million EBITDA range. Some of them have solved that, some of them haven't. Like Revenue Zen, we acquired that in January and it was at about 300K EBITDA. But they had solved for all of that. So the EBITDA was lower because they have a CEO that isn't the founder. They have a sales guy, they have a marketing guy, they have a head of SEO and a head of, they have various different department heads. So naturally the EBITDA is lower, but they're primed for growth and they're already growing really well. So that, that's going, that's
I was
good.
going to ask that if they added all the infrastructure, then the trick is, what did the trajectory look like after that? Did it continue to,
Um,
move back in the right direction, or,
yeah, I mean, it helped
because
that we gave them stock options in Onfolio, so it really lit a fire for them. But January was the first full month, so we took over January 1st. January they did well. February they did well. March hasn't closed yet, but I think they're probably going to do even better. They just signed a bunch of new clients. I think April we're looking at a 50 to 100% increase in their bottom line, and May, June, maybe even a 2x, 3x. So this is the first business where we've acquired sort of the ready-made team, and we definitely want to do it this way every time if we can. Really, realistically, though, that won't be the case. So, kind of back to your question, it does vary. Like I looked at a 900K EBITDA business yesterday where the founder hasn't really replaced himself yet. And I'm kind of like, well, that's okay. You got 900K to play with. We can hire someone. That's fine. Let's work on that together. The issue is when it's too small, it hasn't replaced everyone and it's too small. So revenues then, if it hadn't replaced everyone and it only had those profits, or not replace everyone, if it hadn't hired everyone and it only had those profits, not enough meat on the bone to make it work. But we were like, oh, interesting. This is small, but it's already got everything. So it's primed for growth. Whereas then, yeah, like a business that's like, say, a million EBITDA or maybe 750K, they've usually, if they haven't got all of the pieces in place, they've probably got like 80% of them. So that's kind of, they're all so different, but that's what we see.
I'm going to play the comedian game here. I'm going to ask you a question, and we're going to circle back around to the end of the punchline here, which is going to be like, how does this play and role in the current acquisitions? But earlier, before I told you I wanted to ask you, I talked to you before you went public. I'm sure before you went public, you had certain expectations of the process and certain expectations of what it looked like before going public and after. How did those play out? Is it what you expected?
The actual process of going public or life as a public company?
Life as a public company, a lot of our listeners out there really want to end up in that. They want to be the CEO of a publicly traded company, and I'm one of probably the minority who says I don't want anything to do with that. I have my own reasons why, right? The constant need to constantly grow. Whether you're profitable or not, you got to grow. You got to grow, or you got to grow, or you're going to be punished by the market. I think our stock market and our capitalistic system in the stock market is a little flawed. We can go into depth in that if you want, but it's flawed in this aspect. If I had a company churning out $100 million a year, every year, hands down, but I couldn't make 101, would it be punished in the stock market or not? And the answer is it would be. If it's not growing, anybody that buys the stock today never sees an increase, so it's going to be punished. So it's just constantly grow or get replaced as the CEO, causing a lot of CEOs to make, I want to say, marginal, if not questionable decisions because they have to grow. To where if you're a company, say you're a or Hershey's, you've been around for multiple generations and you're just churning out $1 billion a year, why do you have to grow? You're just a money machine. So that's the one reason I don't know if I'd ever want to be the CEO of a public company. But how did it let's go back to my question, I guess, and that is you had certain expectations you went into it. It's like then you get married, right? Like the same thing as marriage. You have these expectations, you think this big idealistic view of what it's going to look like to be married. You got this big idealistic view of what it's going to look like to be a CEO of a publicly traded company. How did reality set in? What does it look like now? What does it feel like as opposed to what you expected?
Yeah, to be honest, I didn't really know what to expect. I think I think being a micro cap company as well is a lot different from being maybe like a big blue chip company.
Mm.
Micro caps have different things to deal with. There's like hedge funds that short your stock and then use the warrants to cover themselves. So they don't really care what you do, how profitable you are, how much you're growing. They're like, most microcaps fail, so we're just going to short everything. And so that scares away other buyers because they just see the stock going down and assume that something must be wrong. And there's a little bit of like sort of economic terrorism going on there, and they badmouth you on the message boards and stuff. So that's kind of par for the course now, and I just ignore it. But that was that kind of surprised me. I guess I expected people to criticize us if we had bad performance and reward us if we had good performance. I didn't expect people to just be quite so. I wasn't expecting there to be so many sharks, which maybe I was naive, but there's a lot.
That sounds horrible to me. It
Yeah,
sounds
no,
manipulative and horrible.
but that's not all it is. Like, there's more to it. Our revenues gone up 6 times since we went public. So we've gone from 1 million to 6 million, and with our latest acquisition, maybe 7 million. So we've been able to grow the company because we raised money, but then we've been able to attract the right acquisition targets because of the sort of prestige and credibility of being a public company. Now, could we have done that as a private company? Could we have raised money as a private company? Sure. Could we attract sellers as a private company? Sure. Like, the private equity proves that. But for what we're trying to do, and let's remember way back to the beginning of this conversation, I'm just some dude in Taiwan, but I also have a
Mhm.
NASDAQ listed company. And so I don't want to say convincing because that sounds kind of adversarial, but I was going to say persuading, which is even worse. But basically, sellers are willing to sell their business to me because because we're a NASDAQ listed company. Whereas if I'm just some dude in Taiwan with some money, it's going to be a lot harder. I'm going to have to pay more. I'm going to have to put more cash up front. I'm not even going to get as many opportunities. So fundamentally, when I think where are we going to be in 3 years or 4 years or 5 years, we'll be able to draw a straight line from there to the decision to go public. So like, yeah, it's going to suck a bit for a couple of years, or we're already in that stage, but you grow a thick skin and you get used to it, and eventually those people go off and pick on some other poor company. So yeah, it's exhausting in many ways. It's brutal and it's a little bit unfair, but I decided to build a company that I can swing big and build for the rest of my life. And I'm 38, so I've hopefully got a lot of that life ahead of me. And so I wanted to do something where the payoff would be worth it. So that's part of the thing as well. So, there's a lot of cliches I could say. You have to bend down if you want to jump high, and so on. That's kind of what it feels like at the moment. We're in the bend down stage. So, um,
Let's say
yeah.
it certainly opens a lot of doors, right? Like to be it's there's a status symbol to be acquired by a publicly traded company. Is Onfolio are you guys you call it Onfolio Holdings company? Do you integrate
Mhm.
everybody in and make it under one brand, or is it they keep their brand and it's truly a holding style company?
Yeah, it's the latter. Like, we're decentralized. So some things we're centralized, like HR and maybe some back end ops and stuff. But yeah, the
Mhm.
companies stay. We're not trying to, like, Onfolio's business is not being an agency or being like this thing. Onfolio's business is being a holding company. And then the businesses we own have their own businesses that they specialize in.
So I've seen you guys are doing a capital raise. You got a fund. Let's talk about that a little bit. So, um, I asked because you live in Taiwan before. I think it was before the show even started. Did you
Mhm.
go the traditional route? Is it a US based PPM, private placement memorandum, and an SEC fund? And you said, yeah.
Yeah.
So tell us a little bit about that. What are you raising? What's the investment? I guess the same thing on investment thesis, or what do you call it? What is it? What is it that people would be investing in?
Well, yeah, structurally, it's a Delaware LLC, a
Mhm.
Reg D 506C fund. So we are doing a concurrent Reg S as well. So US investors need to be accredited. Non-US investors, they invest through the Reg S, so they don't have that requirement. But the thesis is, well, you can probably tell from the way this conversation's gone, but we're buying more agencies. And we've got a lot of deal flow, a lot of agency owners who would sell for 3x, and maybe they'd only take 40-50% cash up front, and we don't have enough cash to buy all of them. So we thought, well, what if we raise a couple of $1 million? So we're raising 2.5. There's probably about 2 million left. We've been raising for about, I don't know, 10 days. And the idea is, well, the SPV will put up the cash or most of the cash portion of the acquisition, and then they'll get, say, 20%, 30% ownership in each agency. Because of the multiples we're paying, like 3x, those
Mhm.
investors are probably going to get like 25-30%. Well, I should be conservative, let's say 20% returns, hopefully more. And they get like a diversified passive investment. And for us, we get to buy all the agencies we want to buy. Our cash goes a lot further. And later, if investors want to leave, they will buy them out, and that allows us to increase our stake and investors to have liquidity. And then in between that, we'll dividend the cash flow out to investors every quarter. So yeah, that's the thesis there.
Awesome. Well, it sounds like you've got some work ahead of you. I seen on LinkedIn that you personally been part of, I think you said 40 acquisitions.
Something
Onfolio's
like that,
done what,
yeah.
half a dozen or so of them. What's
Since we went public, we've done five. Before we went public,
Yeah.
we did, yeah, probably about five. Yeah, we've probably done about somewhere between 8 and 10 of our own acquisitions. And then I did a few personally with my own money over the years. And then I've advised or worked with investors for, yeah, about 40. But some of these were like 50K. So, small
Yeah.
acquisitions. Some of them were $4.5 million is our largest. So it's a range.
So how do people reach out to you? How do people get a hold of you if they decide they want to see what you're doing, do the investigation? Do they want to invest with you, or just, maybe they need some marketing services? Maybe they like you here and they want to use one of your agencies. How do people reach out to you?
Pick your poison, I guess. So onfolio.com is the website. If you use the contact form there, it'll find its way to me. You can follow me on Twitter. You can follow me on LinkedIn. I have a newsletter which I'm trying to write more regularly, which is just onfolio.com/newsletter. And you reply to one of those newsletters, I'll read it and I'll reply to you and stuff. So whatever people fancy, I'm not hard to find.
Well, I've asked you a lot of questions today. If somebody can only walk away with, say, two or three things from this conversation, what would you want the key takeaways for people to remember?
Well, agencies don't suck. That's one. Whether you invest with us or you start one or you buy one for yourself, just pay attention to them. Haven't really talked about this, but a lot of my experience, my experience and my successful acquisitions just come from getting reps in the game and building a muscle and sticking around long enough to kind of run out of mistakes to make. So I think if anyone's sort of interested in acquisition entrepreneurship, just get started with something. Sure, you're risking money, you might lose it, probably lose some of it in the beginning, but that's the best way to learn. And then the third thing would be, depends when someone's listening to this or watching this video. But I think now is a great time to buy businesses. I think the prices are going to go up in the future, and there's a lot of fear in the market. There's a lot of people who are not buying businesses because they're afraid. So if you're willing to either take those risks or you just kind of know how to mitigate those risks, I think now's a great time. So yeah, that would be my
Yeah.
my big three.
People ask me, what's the number one skill in this field, like this acquisition entrepreneurship? And I always say it's tenacity, the ability just to keep trying, trying to figure it out, do something different. There's no, you can be an accountant, you can be a marketing guy, you can be an attorney, but you still need the tenacity to go through dozens and dozens of deals and figure out what's right for you, right? And there's a buyer for almost every business, and more often than not, it probably shouldn't be you, right? There's certain things that you're good at, there's certain
Mhm.
things I'm good at, and I tell that to everybody. Tenacity is probably your strongest skill, and that's who I see succeeding. Like you learn from your bumps and bruises. I'm still going through my bumps and bruises, and I'm still learning. That's why I'm interviewing all you guys. But I think tenacity is probably the key theme that I picked up from your conversation about learning from your lumps there.
Yeah, and I think that's probably true of all entrepreneurship. If you're starting a business
Hmm.
from scratch, tenacity is one of the most important things as well. So, I mean, when is tenacity not good? Like, tell me somewhere in life where tenacity is not a good thing. But yeah, it's definitely a lot of tenacity, a little bit of creativity, and throw in a pinch of luck, and you got yourself a nice recipe there.
Awesome. Well, I thank you for being here. I don't know what else to ask you there. Is there anything I missed, or is there anything I should have asked you?
No, I mean it's been a very wide-ranging conversation. I think we've managed to throw some value in there. I think we've covered a lot. So yeah, no, I'm good.
Awesome. Well, I look forward to seeing you succeed. I watch you closely in the content you stuff put out on your LinkedIn. If you guys are listening out there, follow him on LinkedIn. He's got some really good things. He evaluates companies occasionally, has a great point of view. He's one of the contributors to this space on LinkedIn and on Twitter. He puts stuff out there to help you move your game forward. And you should be following Dominic here and making sure that you're connected with him and see what he's up to. I look forward to seeing you succeed. We'll probably follow back up in another year or so. And I want to hear you're at the 10 million mark or the 15 million mark. I love seeing success stories. And if there's any way we can help you out, any way the audience can help you out, always reach out to me through LinkedIn. And I kind of sit on top of that more than I do my email. But reach out to us and we'll help you. We'll actually, I'll put the word out to the listeners and stuff and tell them what you need, and we'll see if we can't help you out. We'll call that a show.
Nice. Yeah, thank you.
I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between 5 million and 30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace. How to exit. That link will be in the show notes. Visit them now.